I think that it's pretty clear that the world is more multipolar than bipolar. But what you're saying is definitely something the US is trying to create very hard. They're working very hard at trying to create a very clear bipolar structure because it would solve all of America's problems. If you could convince Europe and Japan and South Korea and India that, look, you got to pick one or the other camp. If you could convince the rest of the world that this is the reality, it would be kind of game over for Russia and China at that point.
Imagine spending an hour with the world's greatest traders. Imagine learning from their experiences, their successes, and their failures. Imagine no more. Welcome to Top Traders Unplugged, the place where you can learn from the best hedge fund managers in the world so you can take your manager due diligence or investment career to the next level. Before we begin today's conversation, remember to keep two things in mind. All the discussion we will have about investment performance is about the past, and past performance does not guarantee or even infer anything about future performance. Also understand that there's a significant risk of financial loss with all investment strategies, and you need to request and understand the specific risks from the investment manager about their product before you make investment decisions. Here's your host, veteran hedge fund manager, Niels Kaastrup Larsen.
A new world order is becoming clearer by the day, and in our Global Macro series, I, along with my co-host Cem Karsan, want to dig deep into the minds of some of the most prominent experts to help us better understand what this new global macro-driven world will look like. We want to explore their perspectives on a host of game-changing issues and hopefully dig out nuances to their work in places that others may have missed. And we want to share our journey with you. Our guest today is one of the most sought out people when it comes to understanding the geopolitical shifts that we are witnessing right now. So please enjoy our conversation with Marko Papic. Marko, welcome back to the podcast, and thank you so much for joining Cem and I today for what I'm sure will be a fantastic and fun conversation as part of our Global Macro series. Now, last time you were on the show was back in December 2022. And things were very different back then. First off, the world was still licking their wounds from COVID. We did not have a new conflict in the Middle East, and we did not know at the time that the US presidential election would be a rematch between Biden and Trump with a Kennedy as an outsider. So I think we'll have plenty to dig into. Now, back in the spring of 2022, Cem and I spoke to one of your former colleagues, Peter Zeihan, and his message really was that the world we knew was coming to an end. But I remember that you had somewhat a more optimistic view when we spoke to you later that year. So I'd love for you to kind of express your big picture assessment of where you think we stand today and what has changed for you since we last spoke. And also maybe what people are focusing on in the conversation you're having with your clients right now.
Yeah, well, I would say that Peter Zeihan is right. The world that we have all known has ended. I would argue that world had ended really in the early 2010s, and that is the world of American hegemony. And what that means is not some sort of a end of America or anything like that. It just means that for a unipolar world to exist, for one country to dominate, it has to have preponderance of power, really preponderance, And that doesn't mean that you need to just be head and shoulder above everyone else. It means head, shoulder, torso, hips above everyone else in the world, so that country can compel everyone else to do whatever it wants with so much as picking up a phone. This is the kind of world that did exist either since the 1990s in a unipolar kind of a setting or a bipolar setting, which we all, of course, remember very, very well, which was the Cold War, where there were two kind of countries with preponderance of power, and they would beat up with all their allies and keep them in line. This is a world that we as investors knew, and it's easy to model. It's a bipolar distribution of power or a unipolar world. Easy to model, easy to put into a framework. And it's a world that tends to be very orderly, more or less. And so that world is over. And so a lot of people see that in a negative light, and then there is a negative consequence of a multipolar global ordering of power. And that negative consequence, unfortunately, is that, conflicts are easier to form because there is no one bully or two bullies to keep the world in some sort of a check, in some sort of equilibrium. But as I've argued for a while now, that world can also have ancillary benefits, such as pretty significant technological innovation in the spirit and in the pursuit of that geopolitical competition. So the government gets more involved in innovation, in financing true technological outbreaks. And also, that kind of a world can lead to pretty interesting, not just technological innovation, but also industrial innovation, productivity, because there is geopolitical competition between states. And so they start focusing on far more significant issues that matter, such as infrastructure development, building up their own domestic capacities. And that leads to interesting outcomes that we can't foresee right now. So anyways, that's both of those kind of have been correct, I think, so far. We have had more conflict emerge between countries you would not have necessarily expected. And also we've seen governments put more effort into, becoming capable in different technological verticals. So yeah, I would say that it's not the end of the world in a negative sense, but it is end of a world that we are comfortable with mentally. In terms of what investors are really focused on, I would say the short term, everyone's really just focused on the US election. No one's really focused on anything else. Ukraine-Russia conflict has fallen into the background, as I expected. That's one of those very, very interesting outcomes of a multipolar world where you can have a higher frequency of conflict, but it doesn't mean that they all matter that much to macro, to global investors. And then, of course, Israel-Hamas conflict is also relevant, but most investors have also put that into the background as well. It's all about the U.S. election right now.
Jim, where do we go from here? There's so much to pick from.
Yeah, I find that actually fascinating, Marko, because I've come to the exact same conclusions over the last 5 years, but for very different reasons. Absolutely couldn't agree with you more. The change really started around 2010. If you were to put a mark on our 2009, from going from this kind of unipolar world to multipolar. The reason I see it happening is more a function of inequality, wealth inequality, and populism. We've seen cycles like this before, right? We started to see here in the U.S. Occupy Wall Street and the Tea Party, all these movements. But in terms of generational push that was happening with this populist push, it really didn't get to a critical mass until Bernie Sanders, Donald Trump, all these populist leaders really picked up on that and came to power, right? And we've seen other periods like this in the past, but it really has, in my opinion, led to this multipolar world because, and this is I think the connection, populism leads to protectionism, really, right? It's this idea that people are local, but corporations are global, right? And so I think it's very interesting. I think yours kind of your framework kind of frames it more as a secular issue, that we're moving to a much more long-term, maybe 20, 30, 40, 50, maybe 100 years, right, of more multipolar kind of activity. Whereas I really see it as a 10, 15-year phenomenon where that kind of populism fades eventually. We've seen this other cycles. I'd love to hear your thoughts about that differentiation.
No, I don't disagree. I don't think I can really forecast beyond strategic asset allocation time horizon, So I think 10 years is really all I'm going to take. My former boss, George Friedman, wrote a book, which was The Next 100 Years. It was a New York Times bestseller, and it was a lot of fun because he could say whatever he wanted. I think the book ends with Japan and Turkey fighting in space with Death Stars. So let's not go beyond 10 years. So let's stick to what you're saying. First of all, I agree with you. There are two dimensions of the evolution that investors have to become aware of. One is a geopolitical evolution, where the collapse of Soviet Union ushered in a unipolar moment. It was great for us because we didn't have to really take geopolitics into consideration at all. They were just U.S. hegemony. I think that is at an end for a number of different reasons. U.S. is still the most powerful country in the world, I think, quantitatively. Materially, you just It's not about, head and shoulders. As I said, it's a lot more to that. You need preponderance of power. So that's number one. Number two is exactly what you're saying, and I describe that, your point in my book. Actually, I spend more time on that because the geopolitics is not that interesting to me. It's like obvious. The US doesn't have the preponderance of power anymore. But what's less understood by investors is this evolution away from laissez-faire capitalism, this Reagan-Thatcher revolution, which gave us the best practices of the Washington Consensus, which was all the sort of policies that emerged out of the Reagan and Thatcher moments, which was the late 70s, early 80s, when the world oriented itself away from dirigist capitalism of the 1970s, which of course gave us suboptimal outcomes. And that's where I do agree with you. The pendulum is starting to swing actually already away from what I call the Buenos Aires Consensus. Now, will that fix the multipolar distribution of power in the geopolitical sense? I'm not sure, guys. You can have a very laissez-faire capitalist global system where every country is kind of like, yeah, you know what? State involvement in capitalism, not a good idea. You can have that world and still having multipolar ordering of power. And that's actually what happened in the late 19th century. I mean, if you think about it, late 19th century regimes were very much influenced by the United Kingdom and its successful period of hegemony. And so laissez-faire capitalism was the name of the game in the late 19th century. So 1880s, 1890s, 1900s, 1910s. And yet the world was extremely multipolar. So, that's the only thing I would disagree with. I think we can have this pendulum swing away from the current left-leaning Buenos Aires Consensus, where you do have less laissez-faire, more dirigist capitalism. You can have it swing back towards laissez-faire capitalism. I'm just not sure that it's going to reaffirm American hegemony or resolve multipolarity. So I think we're kind of stuck for the foreseeable future in a world where more than two, probably around 5 to 10 countries can pursue foreign policy independent of one another. And I think investors should prepare for a world where conflict, the outbreak of military conflict, has higher frequency, but I'm not sure that you're going to have to trade every one of those. I'm not sure that this is something that's going to really change the world. In fact, my impulse is to almost fade every geopolitical event and then invest the geopolitical trends. So to me, geopolitical events are like fleeting, they should be faded, especially in a world where their frequency is higher and they don't necessarily produce the kind of global impact you would expect. Think about Ukraine and Russia. You guys, we're like 10 minutes into the interview, not a single question. 2022, it's all about Ukraine and Russia, right? Think about that. Israel, Hamas. Again, nobody's really asking questions about those. We can talk about them, but that's because you can have a higher frequency of conflict with less relevance. And that's the world that I think we're in for at least 10 years.
I completely agree with that comment, and it's very much germane to kind of the volatility work that we do as well, right? There's a general sense that periods like this of deglobalization and conflict that we see are more volatile. And it actually works out that you have more frequent events that can be volatile, but broad volatility is actually significantly lower, which again, you wouldn't think about. And it's because of a more consistent trend towards more understanding of what's happening as well. So it is, I completely agree with you. The data actually backs it up.
Okay, just before you ask me the next question, just piggyback on that point, I just want to say, what's interesting, I have this chart of S&P 500 reaching all-time highs and ever higher volatility levels. And that's a great way to visualize the world we're in. You can have this higher volatility level, just baselines higher, but stocks don't care. Their risk assets are like, okay, cool, we get it. It's a messier world. You can still go higher.
Yeah, I agree with that. To build on a couple of those ideas too, during the 60s and 70s, right, it was, again, the nearest period we have that, in my opinion, kind of tracks some of this deglobalization and more multipolar world, as you kind of referenced. People talk about kind of the causes of that, right? And, they referred to the Vietnam War, kind of OPEC crises, fiscal stimulus, and more protective, protectionism during that period as well, as leading to inflation. But I really see them as all the same thing, which is basically what you're pointing to as well, right? This period where broadly everybody is really in a period of conflict as opposed to cooperation as a function of worrying about their own kind of people. I'm curious to hear your thoughts on the type of things that you see happening if you believe this period is going to be going on for 10, 15 years. Are there things that are on your radar that we haven't seen yet that will potentially that other people aren't looking for?
Yeah, I do. Absolutely. Let's go into the meaty stuff. This is very much, by the way, a strategic asset allocation discussion right now, not really a tactical one, which is fine. I'm almost more comfortable with the beta rather than the alpha. I titled my book, by the way, Geopolitical Alpha, and then after publishing it and getting a lot of feedback, I was like, yeah, I should probably call it Geopolitical Beta. Now that I think about it. So let's talk about this, because what is not priced in? What happened in the 60s and 70s that is yet to happen is really your question. So first of all, why did we have the 1970s kind of inflationary, world that we did? There's a lot of reasons, but I don't think it was OPEC's fault, my colleagues, my former colleagues at BC Research did a lot of great outputs that shows clearly inflation was going up well before the oil shocks. And it was going up because the United States of America ran, many reasons, but one of them, I think most important, is exactly what you're saying. We had the Great Society of Lyndon B. Johnson. So it wasn't just about geopolitics and oil supply. It was also about domestic politics. It was about income inequality. It was about the civil rights movement. It was about LBJ basically running a pro-cyclical fiscal policy, stimulating the economy when there was no reason to kind of do it. There was no real recession. But the country was really tearing itself apart in the 60s for a number of different reasons. The civil rights movement was a very, very difficult thing to evolve through and to integrate and to implement. And so fiscal largesse was sort of the aloe vera, to soothe all these policies through. And so you already saw, and of course, Vietnam War was part of that as well. So you have a considerable amount of fiscal largesse that happens that sets us up for the inflationary world in the 1970s. And I think one of the reasons that LBJ's administration was comfortable with some of these outlays is that also in the early 60s, don't forget, we had secular stagnation. So we had low growth, low inflation period in the early 60s and the late 50s that put policymakers into complacency about fiscal policy. They started spending a lot, and then we had inflationary outcomes. And that's grafted almost exactly to our experience right now, where we had secular stagnation after the great financial crisis. Policymakers get complacent. They're like, well, maybe we should use some of this fiscal. They do it too much after the pandemic, and then we get the situation we're in. So what's the difference? Well, one difference is, massive difference between now and then, is long-term inflation expectations. Long-term inflation expectations right now are acting as if nothing happened. I have this chart in my chart pack of 5-year forward, some break-evens, and survey expectations, just whatever. And it's a hilarious chart. It's 2020 happens, and it's anchored at 2.5 to 3, depending on 5-year forward is 2.5. Surveys are at 2.83. Nothing to see here, folks. Move along. These are not the joints you're looking for. Whatever you want to say. And I'm sitting there and I'm telling my clients, look, this is what hasn't been priced in. We have had a profound change. As Peter Zeihan says, it's the end of a world. It's the end of the world that we know in globalization, in the way we approach climate change and energy policies, in the way we approach rivals and potential trade partners like China. So basically, I joke, everybody woke up one day after 2020, decided China's evil. Everybody woke up one day, decided climate change is going to kill us within not next 30 years, but 5 years. Everybody woke up and decided we need to abrogate all trade with the largest commodity exporter in the world, which is Russia. Everybody woke up and said, free trade. Nonsense. All that laissez-faire stuff. That was 100% wrong. Let's go into this dirigist stuff. Let's grow our way into productivity. Fiscal spending will give us new technologies. Everybody woke up at the same time and shifted this way. And the five-year forward hasn't budged. Long-term inflation hasn't budged. Now, I do think that there are many, many differences today from the 1970s, which is why we're not going to have the kind of inflationary outcomes from the 70s. Can I get like 50 basis points or 100 on the long term? Can I get 50 basis points on the long term inflation? That's all I'm asking for. Can we be at 3? Maybe 3.2% on the 5-year forward? Maybe 4, like 3-year break evens. Can they go up a little bit? And that's what I think is the most mispriced. And that really matters because the 10-year yield is at 4.3. It touched 5%. The 10-year yield, US 10-year yield touched 5% at the end of 2023 with long-term inflation expectations not having budged at all. And that just tells you that the fair value yield could be actually much higher if we do get that movement. The other thing that I think is interesting is if you look at gold prices relative to long-term real rates, it's a one-to-one correlation. Gold is a non-yielding asset. You don't want to have it when real rates are high. And right now, gold prices are above 2,000, whereas they should be at about $1,000, according to that chart. And that tells you either gold prices are in for a massive collapse, or the way we deflate long-term interest rates to get the long-term real rates is not right. In other words, again, long-term inflation expectations are wrong, and gold is right. And I think that latter conclusion is my conclusion.
I couldn't agree with you more. Actually, it scares me when I agree with somebody as much as we agree. It's the one thing that doesn't fit, right? It's the one piece that doesn't. And the name of the show is Top Traders Unplugged, right? That's what I do and manage money. And that's the one thing that makes little to no sense. And the question is why, right? That's the real question, why? And I think the interesting part is the one thing that is very different than the 60s and 70s is how financialized the market is, and the introduction of derivatives, the ability to, the reflexivity is much more powerful to financial markets themselves. And I think that's why you get some of these big structural mispricings that can last for quite some time. And you almost need the counterintuitive opportunity at this point to exist in order for that pricing to come to fruition. And it's really this macro versus flows reality that now the flows are so much more dominant than they used to be. And so I think that's why it's mispriced. I agree with you. It's still mispriced. And at the end of the day, macro still will trump, the flows. But sometimes you're going to need to take a path that is going to make that trade have to be counterintuitive and to kind of reach an ability to come to fruition. But I couldn't agree with you more on that mispricing. I'm going to shift gears a little bit here. What I find interesting is we do agree on all these things, and it seems like if these are the trends, there are certain types of secular things that you should be investing in, right? Obviously, commodities and harder assets, government spending, things that benefit from government spending, infrastructural, national defense, healthcare, housing, investing in the economy instead of the market. So what I mean by that is high DCF value, right? High quality businesses that are going to kick off money. That kind of Warren Buffett style of investing should come back. And deglobalization, onshoring, nearshoring, et cetera, right? So all those things seem like, okay, these are the things you really want to be focused on investing in if, secularly, if this is where we're going. But you brought up a couple things recently that really kind of made me question some of these things in the short term. And I want to bring those up and dive in. One, you mentioned the election, but there's this Donald Trump factor, right? And he's this really iconoclastic politician who, much like you said, only Nixon could go to China, right? Trump, himself could be the one, right, to actually kind of buck some of these trends, particularly in the short term, and bridge some of the gaps with China, right? Which is a major driver of a lot of these trends, right? The number one and number two economies and the fissure that's happening. Does Trump have other things that he wants to accomplish for himself and for others that leads to a deal there that could bridge some of this deglobalization? That's one thing that really got me thinking a bit lately that could buck some of these trends. The other one is just the amount of investment on the commodity side, particularly LNG, that could solve some of the commodity issues where Europe in particular is having, right? And really that brings supply on to help some of those things. So I'd love to kind of explore some of these counter theses together and dive into that. So I'd love to hear your thoughts.
Yeah, so I don't think that my view on the Trump presidency, foreign policy, trade policy is necessarily like going to reverse what many call deglobalization. I think he just lands the plane. That's it. I just think that, Donald Trump took off with the plane. He's the only one that can land it. What do I mean by this? What I mean by this is that, Trump unleashed this nationalist, protectionist, move in U.S. trade and economic policy. Obviously, like he identified that the median voter in 2016 was not really interested in TTP. And, Hillary Clinton had to pivot, like right during the election campaign on this issue. So he identified like voters were ready for some protections. But his intention was always like, I'm going to use this as a bludgeon, as a tool, and then get deals. And so I think that in that way, he's the only person who can land that plane. The Biden administration cannot. And that's, in part, it's not just incompetency. I don't think that's the problem. I think it's more that it's kind of the political system in the U.S. is unfair. To the Democrats, it's very difficult for them to sell any kind of a free trade deal in this environment as being legitimate. It's just very difficult. That's why the Biden administration didn't conclude a single one. It's very difficult for them to make any deals at all. So I think that Donald Trump will be able to get those deals done, even with China. And so just to be clear, what I'm saying is it's not like he will bring about the 1990s style globalization, but he will be able to conclude trade deals and foreign policy deals with rivals with very little resistance domestically. And that will allow him to do those deals. And some of them will probably include, Chinese companies building factories in Ohio, as he recently said at one of his rallies. I mean, he was in Ohio giving a, pre-election rally in front of a crowd, I'm sure, of many, many unionized manufacturing workers. And he's telling them, like, I'm going to force China to build factories in the Midwest to applause. I mean, I could just imagine Joe Biden attempting the same thing and inciting a riot, And that's very important. That's very important because it doesn't mean that he reverses and brings back the kind of globalization we had before. It's still very much a capex intensive type of an environment where we're still redesigning supply chains, which requires a lot of commodities. It's probably less efficient. You probably don't, from a purely mathematical perspective, you probably don't want Chinese, EV factories in Ohio. Probably want them where they are currently for efficiency's sake, but fine. For political reasons, Chinese will move, say, okay, fine. We'll do what we have to do. So that's what I'm saying. It doesn't really reverse the entire environment, but I think he just lands the protectionism plane. And I say he lands it because it resolves some of the issues that both America has and that China has. It's actually creates a new stable equilibrium. And by the way, one interesting thing about this is the Chinese are already doing this. So the Chinese are literally spending their own money. The Chinese are literally investing in American national security priorities. What? Time out. Say that again, Marko? Yes, the Chinese are literally spending money on satisfying American national security priorities. They are themselves what I call enemy shoring. So who is the biggest investor, source of FDI in Vietnam and Indonesia? And for a little bit there, even in Mexico in 2023, 2022, Chinese FDI into Mexico skyrocketed. So the Chinese have basically accepted that they have to rebuild the supply chains and move these factories away. Because the Americans are just not going to let them build as much within their own borders. So the Chinese companies themselves are moving around already satisfying this demand. And so what you see in trade balance terms is U.S. trade deficit with China is improving, but with the rest of the world, it's deteriorating massively. And so it means like it's this globalization continues, but just within the framework that Trump created in 2016 and 17. So that's the first thing that I would say. On the other issue, yeah, LNG, there's overinvestment, as it is with commodities. When there's a supply problem, we panic, we overinvest. I think that overinvestment was already built into the system way back. We've got a lot of LNG coming online out of Qatar, Russia, Canada, Mozambique, US. And so in 2 years, Europe is going to be flooded. It's going to be drowning in LNG. And my thesis on that one is just European energy crisis is over. And so if you want to invest in this deglobalizing world where CapEx requirements are really high because we're rebuilding very efficient supply chains, if you want to invest somewhere, you want to invest in European industrials. They're already set up to win in this world because they're good at building machinery and CapEx goods. They're already good at that. But now they're going to have this advantage of cheap electricity over the next 2 years. And currently, they're trading at a discount relative to their American peers, as an example. Purely, I think, because of this like economist cover-fueled, Europe is going to deindustrialize. No, it's not. It's going to continue being industrial, and in fact, it's going to have an energy advantage. So I would argue that both of those theses that you brought up are actually like tuned to the world that we're in. There's just a little modification on the thesis.
Yeah, absolutely. I couldn't agree more. That's it's a great way to put it. But I do think it does highlight the even within a secular trend, right? You would have been incredibly, if you just got right that monetary policy and growth, all the trends that we had for the last 30 years were going to be in place. You would have been incredibly wealthy, but you also would have lost, 90% in the NASDAQ from 2000 to 2002, right? So I think it's important to get the secular trends right, but realize that in the short term, meaning 1, 2, 3 years even, you can get completely blown out being massively long a secular trend, in the short term. And I think something like this election represents a really important time to be incredibly careful. Even if you're right on that secular trend, it could be very wrong for a couple of years.
I think the election is the way when I speak to clients, I say the election is like a macro black hole. It bends time and space around it. And so what I think one of the things that the election has done, more like we've spent about 20 minutes now talking about secular things, multipolarity, higher inflation, all this good stuff. But really the last 6 months has been about one thing and one thing only. The election is coming. Election is a risk. The Fed is like, we're going to take some left tail risks off the table. And so they produced a right tail risk. They took a left tail risk off the table. They don't want a Silicon Valley Bank-like event ahead of an election. Is it because they want Joe Biden to win? I don't need that argument to see why they want to take left tail risks off the table. But yes, I do believe that the Fed wants Joe Biden to win. For sure. This is all that matters for the next 6 months. CapEx cycles, industrialization, deglobalization, higher inflation, who cares? For the next 6 months, it's all about November 5th and then November 6th. And that's why in December of last year, when I wrote my annual forecast, I set my S&P 500 target at 5,500. I actually asked my team, give me all the investment bank targets. What's the mean? 4750? YOLO. Let's go. 5,500, just to troll the investment banks. That's why I did that. And then I thought about it a little bit, and I was like, my end of the year target is 5,500, but my strike date is November 6th.
Yeah, very good.
And that's where we are. I think that's all that matters right now. Nothing else matters.
I completely agree. If you look at election, this is the stat I want to throw at you. Niels and I have talked about this a little bit, but I want to highlight because it fits exactly into what you're saying here. If you highlight 1928 to 2020 election years, right? And you look at the data set, everybody's like, look, election years are so positive. You got to be bullish in election years. It's 11.5%. That sounds, that's positive. That sounds great. It wins 83% of the time. But then if you cut the data, right, and you just take that 64 to 82 period, right, that we were talking about, that inflationary period, And you look at those dates, 64, Johnson was up 16.5% that year for the election, 68, 11.1, Nixon, 19%, Carter up 24%, Reagan, 32%. Every single one was double digits positive. The average return was 21%. And if you take just that period out of that whole data set, do you know what the returns for election years are? 5%. 5%. And I think that's incredibly important. That populist period, populism, right? People voting. These are the periods where the fiscal spending gets kicked in, right? That's really when it matters. And that's what we're in right now. It's not just elections matter. Elections matter when populism is in charge. And I think that's a critically important point. The second add-on point to that, which I think is incredibly interesting and important, is if you take that same period, we know 1968 to 1982, what did markets do nominally? They went nowhere. Yet every single election year was double digits positive.
That's a great point. Wow.
What do you think you'd have 4 election years in that data period, and all 4 of them together, 21% on average, right? What do you think happened the other 10 years? Well, simple math. It lost 9% per year.
Yeah.
Nominally.
Wow.
Now, 9% a year, but nominally. Now, in real terms, it lost 17% per year, 16 years, because you had all that inflation during that time.
That's a really cool point.
It's an incredibly powerful data set, particularly in the context of what you and I are talking about, right? The secular trend relative to what's happening election year, and all that matters is election this year. Anyway, I think that's a really critical interest.
I'm going to butt in here because we've talked a lot about sort of things from the US perspective. You've mentioned briefly something that's very profound, actually, regarding Europe and the energy. I'm curious if we just stay with the 10 years that you talked about you're comfortable with. I'm kind of curious on your view as how will this new world look from a European perspective, from a Chinese perspective? What are the things they're going to be experiencing with the changes that you see coming perhaps from the way the US will behave?
Well, I think there are a lot of idiomatic expressions in the English language, but I think in other languages too, for how when you're on the bottom, that's when the reversal happens. Like the Bible says, the meek shall inherit the earth. Necessity is the mother of invention. All those sayings. And I think that a lot of people in this industry read too much of garbage journalism, quite frankly. And they also extrapolate linearly. And when you do that, you're going to get yourself into trouble because, I can't tell you how many clients tried to short the euro at like parity in 2022. And I was like, okay. It actually ended up being temporarily right because we went down about 5% from parity. But then, there was a vicious rally in September of 2022 of European assets, precisely when everyone was the doomiest and gloomiest about Europe. And I think that history is filled with examples of how necessity truly is the mother of all invention. And in Europe's case, I think the best thing that ever happened to Europe was the energy crisis of 2022. I think one of the best things that probably happened to Europe, of course, it's a human tragedy, so I don't want to sound glib, but, Russian aggression on Ukraine certainly woke up Europe to geopolitical realities that they're facing. One of them is this multipolar world where they cannot just simply depend on the US constantly. And it's not even clear that US has their best interests of Europe at heart. US has its own interests and so on and so on. And so I think that, these events that have happened over the last 2 years are moving, I think, Europe into a direction that is positive. And one of them is energy security. So, we were told in 2022 that they couldn't build import terminals in time. The Germans ended up building several of them in basically 3 months. It was supposed to take 2 years. They now have more import capacity than really necessity. And supply of LNG is coming online. It was always going to come online, by the way. A lot of folks just ignored that. And that's why the deindustrialization thesis makes no sense. If you're building factories, you're building them for a decade. You're not going to move a factory to the United States of America if 2 years from now your electricity bill is going to collapse. No, there is some anecdotal evidence that some manufacturing did move, but that was usually like manufacturing that was using natural gas as a feedstock into the manufacturing process. And so everybody always tells me, but what about BASF? What about the fertilizer industry? I'm like, okay, you guys do know Europe does more than just like make fertilizer. I don't know. Like, so that's where I think it's a really interesting outcome, where the second and third order effects are much more interesting to me than the first order effect. And the second and third order effects for Europe are that it will have energy security. Within 2 years, Europe will be able to buy LNG on the spot. And it will be such a buyer's market that I predict a future where the Europeans are basically playing off LNG cargoes off of Russian piped natural gas. Where they're basically telling Russia, we're going to buy a little bit of spot from the pipe. We're going to buy a little bit on spot from an LNG tanker. So no more 10-year contracts. No more, oil linking piped natural gas deals. Yeah, forget it. That's Stone Age. We're going to do whatever we want whenever we want it. On top of that, there is a push for more nuclear power. And here, I always hear this like very American-centric view, but the Germans don't want nuclear power. Who cares? Who cares? That would be like saying Illinois doesn't want nuclear power. Okay, so Ohio does. Like, are we stupid here? Like the French are building nuclear power plants, and they have more reactors coming online. They'll just sell the electricity back to Germany. And in a world where there's plenty LNG, these electricity prices will be perfectly fine. So this whole notion that just because Germany doesn't want nuclear power, somehow Europe is screwed is, I think, very simplistic, and it doesn't make any sense. You can have territories that refuse to build nuclear power plants. If the neighbor is building nuclear power plants, you're fine. So I think energy security is resolved, and then there's a geopolitical reality. I think the current German government has no chance of winning the next election. It's pretty clear. You will have a far more geopolitically aware country with the next administration that will swing the pendulum in Germany towards a self-realization that, World War II was a long time ago, and it's time to have a foreign policy with some teeth and with some intentionality. So that's going to happen. And you're going to have more integration within Europe to create a geopolitical actor. Not the same as US or China, but I'm very bullish on this direction. I think Europe is becoming aware of the threats around it and is building capacities to meet them. That's good for European defense companies. That's good for industrials domestically. And ultimately, it's going to be good for electricity prices over the long term. So, and look, the market has rewarded Europe. I mean, the DAX is at all-time highs, despite the fact that the country is in a recession. And I think some of this has to do with this overcorrection towards the bearishness in 2022. It was seen as like, well, Europe can't, sustain itself. So, people often ask me, because I'm a dollar bear for a number of different reasons, not because like the US is collapsing, the dollar goes through bear markets. It's a macro view. It's not a geopolitical view at all. But they always ask me, where are you going to buy? Where are you going to buy? Oh, I'll buy the euro. Absolutely. What happened in Ukraine is on the long-term viability of the euro. I mean, these debates are over. Nobody in Europe is debating whether they should leave the euro anymore. Maybe some of the French groups, maybe AfD a little bit still in Germany, but most of the populist leaders in Europe, like populist, Eurosceptic in a traditional Gaullist sense, most of them have pretty much marked this as like the end. They don't want to debate euro's existence. They're fine with it. They're anti-immigration, they're anti-this, they're pro-cyclical fiscal policy, they're populist. But euro's viability is out. And I think that also gives assets domestically a little bit of a flow advantage as well. Like the fear of, owning euros and then 10 years from now, then disappearing. I think that fear is dissipating. That existential risk is off the table for now.
I agree with a lot of what you said here. Obviously, there's certain things I have no clue about sort of, energy, future energy supplies and all of that stuff. But certainly it has been a wake-up call for Europeans and being based here in Europe. It's very evident to see. It's nice to hear an optimistic view on Europe. I don't come across that so often because people are still very focused on the US being the only game in town. I think actually there's it's one of those weekly economists or something that has a feature out at the moment, a front page with a weightlifter in Stars and Stripes, and that's kind of the strongest economy out there. But my point is, it kind of must be based on the fact that the conflict that we're seeing will be contained to Ukraine. So I'm just curious, generally speaking, from a sort of conflict point of view, geopolitical point of view, how you see. I know it's been 43 minutes now where we haven't talked about Ukraine in that sense, but I am curious, what happens with Ukraine?
So first thing I just want to say is, you're absolutely right. Everyone's overweight the US. And one of the reasons I'm optimistic in Europe is because everyone is overweight the US. I mean, I have allocators coming to my office. They run very large endowments or pension funds. And they ask me questions like, why should I ever own an asset that's not in the US? That's where we are today. We're professional, institutional investors that allocate hundreds of billions of dollars as their job, don't want to own a non-US asset. And so my argument here is not to say it's the end of America at all. The US is clearly the most powerful country in the world. Multipolarity doesn't mean US is not number one. It just doesn't have the preponderance of power. But that's not why I want to allocate outside the US. Just to be clear, before I answer your question in Ukraine, I just want to say one very important thing. Too many people equate this to some sort of geopolitical ordering. That's so simplistic. It's like almost insulting. Where was the US underperforming last? It was from 2001 to 2009, right? That was your last CapEx cycle. That was Jim O'Neill and BRICS. That's when you wanted to own emerging markets and commodities. Well, where was the US in geopolitical power? It was probably the most powerful political entity in history of humanity. George W. Bush was like throwing darts on a map and choosing where to invade, So US was at the peak of geopolitical power, but its assets were underperforming. So that's one thing that I want to say. Yes, I'm definitely bullish Europe. I'm bullish Japan. I'm actually bullish emerging markets too. And I think we're entering a 5-year period where US will underperform, but it's not, a function of some sort of American decline. It's a function of the macro setup that I think we're in. Now, to answer your question, absolutely, if Russia starts invading the Baltics, you probably don't want to be long Europe. And I think that what we've seen over the last 2 years is that Russia's now willing to go all in. I mean, like if you step back and really squint at this issue from a 30,000-foot perspective, Russia clearly has an advantage in terms of, material resources, but it doesn't have an advantage in terms of esprit de corps and credibility, quite frankly. It's not willing to commit itself to the Ukrainian conflict in a massive way. So it has constraints. And I think these constraints are domestic. We have polling in Russia. This is pro-Kremlin polling agencies. Hey, God bless them. They could be pro-Kremlin. I'm looking at the trend lines. And the trend lines in Russian public opinion are that majority of Russians now does not want the conflict to go on. They want the government to wrap it up. And more importantly, a majority of Russians, and maybe this is where the pro-Kremlin bias in the polls comes through, but the majority believes they won. Which is kind of like almost like, thank God they think they won, because it allows Putin to then slowly end the conflict, call up his buddy George W. Bush, see if the mission accomplished banner is somewhere still available so they can reuse it in Russia, throw it up on the aircraft carrier that can barely float, and boom, they're satisfied. Now, there is part of Donetsk, the Oblast of Donetsk, which I do believe they kind of have to conquer. It's northwest of Avdiivka, the town that was recently conquered by the Russians. It's kind of a sore thumb for the Russians. It's part of Donbass that has not yet been conquered. So there's about a third of Donetsk that still needs to be conquered, I think, for the Russians to truly be satisfied. But that's it. They haven't tried to relaunch an offensive against Kremlin. They would take too much mobilization. I don't see a domestic consensus for that or really political maneuverability for that to happen. So to answer your question, from the Russian behavior of the last 2 years, what we know is that if they're not willing to launch a new offensive in Ukraine to retake Kiev, and I mean really big offensive, how do they have the domestic political maneuvering room to do anything beyond it?
I'm curious, do you see Russia as a fully independent actor? I mean, I kind of look at it as almost like a vassal state of China at this point, right? Like it is, they came out in early 2022 and announced in a very clear document, right? Like we are united against the West in X, Y, and Z, right? And honestly, the Hamas act against Israel as well, right? It seemed like a very another front on the same war, essentially, right? This to me almost seems like a bipolar conflict that is, continuing down a more secular path. I'd be curious, right? What happens, and all this, both from Russia and China, I think, as tends to happen with these major conflicts, happens due to a feeling of weakness, right? A feeling of being encircled or and somehow at risk. And I think that union, right, was out of necessity as well. What happens the more they become encircled? The more that Europe is stronger now, and it doesn't have an energy constraint, and now can continue to encircle, right? Does that increase the bigger risk of something much more global? It may mute, right, the short-term war in Ukraine, but does it make the existential risk of a bigger global conflict, a hot war, more? I don't know, just being polemical here.
I think if the world did become bipolar, you're right. It would risk. Well, first of all, it would be kind of in an equilibrium, but it would be a difficult one to maintain because Russia and China, if they were united as a pole, they would stand no chance against the West. Really, like there's just zero chance. It would be a very poor alliance. I mean, Japan, South Korea, Taiwan, Australia, New Zealand, Canada, the EU, and the United States of America are just overwhelmingly powerful technologically, economically, materially. From a resource perspective, it's not a contest. We're not fighting trench warfares anymore. So like China has people, like great, increasingly aging people too. So I think that a bipolar distribution of power would serve American interests. And that is why what you have just said is sort of what Americans have been trying to argue to the Europeans, to the Japanese, to the Indians. Like, hey, Russia and China are allies. You guys need to be on our side, and we need to create this containment structure around China that we had around the Soviet Union. The reason that I think you're wrong, and the reason that the American kind of foreign policy propaganda has not worked, is the rest of the world just doesn't see it that way. And I think the rest of the world is kind of right, objectively. Like, China and Russia are not really allies. I mean, think about it. Russia needs a lot of help. Over the last 2 years, they've had munition supply problems. They've had shortages. China is a weird, strange ally. Hasn't really given them any military help. And believe me, the Americans are watching carefully. If there was evidence that China was sending military equipment to the Russians, like, U.S. would have found it. In fact, there was that case where the U.S. did find that there were some drones being sent to Russia, and it ended up being some college student that started a drone company in like Inner Mongolia, sending drones to Russia, unbeknownst to the fact that Beijing didn't want him to do that. That guy has not been heard of. I'm joking, actually. I don't know what happened to him, so don't quote me on that. But the point is that the Chinese have maintained an arms embargo on Russia. There is some seepage, sure, through Central Asia, but there's seepage through Dubai. Like, there's seepage through like EU countries. So let's not make a big deal out of it. So that endless friendship agreement you're talking about, that Xi and Putin agreed to ahead of the invasion, I mean, I gotta say, like, China's a weird BFF to Russia. It hasn't really done what you would expect an ally to do, other than buying their oil, which again, Indians are doing. And they're supposedly allied with the US against China. So I would say that the bipolar ordering is just not happening. And the big wedge player, really critical player in all of this is Europe. And the Chinese don't want to alienate Europe. That's why they've pulled the very controversial ambassador to France, who's kind of the tip of the spear in terms of wolf warrior diplomacy. He's been pulled and recalled back to China. They've tried to massage the rhetoric. And they've tried to improve a relationship because Europe remaining an independent actor is a very important factor to the global multipolarity. If Europe was just blindly following the US on this, then yes, I think we would be in the world that you're describing, but we're just not. And then you have other actors like Saudi Arabia, India, Indonesia, South Africa, Brazil, countries around the global south are increasingly becoming aware that neither China nor the US are as powerful as their counterparts during the Cold War, the US and the Soviet Union. And so actually it pays to be geopolitically promiscuous and sort of flip and flop between the two, because you end up being showered by both, with money, by both superpowers. It's almost like divorced, like children of divorced parents. You know, you get 2 Christmases, you get 2 birthdays from mom and dad, and that's what's happening as well. And so just from the behavior of states, I think that it's pretty clear that the world is more multipolar than bipolar. But what you're saying is definitely something the US is trying to create very, very hard. They're working very hard at trying to create a very clear bipolar structure, because it would solve all of America's problems. If you could convince Europe and Japan and South Korea and India that, look, you got to pick one or the other camp. If you could convince the rest of the world that this is the reality, you know, it would be kind of game over for Russia and China at that point.
The U.S. is their incentives across the board, right? And you had up until 2 years ago a very ascendant China, right? The conversation around China, speaking about narratives, right, and how they come and go, is so different than it was just 2-3 years ago. China, like, you know, there books after books were written by well-known people who I won't name about how China was on the verge of overtaking the West. Right? Now we're talking about, oh, there's no chance. China's this dying power. They need, and they believe, I have people, you know, I work with several Chinese nationals, and I understand the culture, and you know, they still do have a great pride and belief that they are the next superpower. So I would push back a little bit. I think it's not just a U.S. narrative. It is, I think that the alliance that came before the invasion of Russia to Ukraine was one that was, to a great extent, because China has a commodity issue, right? They have this true weakness that they are aware of, and that their only way they could secure that was through an alliance with Russia. And I do think China has, and I could be wrong about this one, I'd love to hear your thoughts, but does have long-term aspirations of breaking that first island chain, right? And all the other things almost will need to. It's necessitated if they truly want to be the world's next superpower, which I believe they still have great aspirations of.
Well, for sure, but so does every other country. You know, like so that's absolutely. It just doesn't make it so. You know, so I was never in the camp that China would overtake the U.S. or become the next hegemon, and now I'm not in the camp that thinks that it's going to collapse. It's just a great power. Its import of Russian oil has, I mean, in delta terms, in rate of change terms, actually India is bathing Russian oil. So their alliance with Russia has not led to a massive surge in Russian imports of oil. Really, they've been importing ever more from the Middle East. And that's very funny in a way, because China's become a factor of stability in the Middle East. It kind of shares the same interests as the US as far as the Middle East is concerned. It wants a stable equilibrium in the region. But to the point about, look, of course China wants to have a good relationship with Russia, and of course it's based on commodities. But again, empirically speaking, over the last 2 years, China has not been willing to do what you would assume a true best friends forever, you know, would do. They haven't sent military technology to Russia that Russia sorely needed. And they've equivocated in their support of Russia. I mean, they've actually argued that Ukrainian sovereignty has been violated. We just don't talk about that in our own narratives here domestically because it doesn't fit it. So they've said, like, America is to blame for Russian invasion of Ukraine. They've said that this is America's fault, but we also want to respect Ukraine's sovereignty, which usually we take out in our reporting of what the Chinese are saying. So I guess I have just a little bit more complicated maybe view. You know, it's difficult to really pin down their relationship with Russia. They want to maintain a very strong relationship with the rest of the world too, particularly in the Middle East, the global South, and Europe as well. because they want to drive a wedge between US and Europe. I think that's the critical thing the Chinese are trying to do. And I think that's why they've stayed back from supporting Russia 100%. They want to be able to rely on Europe as a source of Western technology for the next 5-10 years. And that's why they don't want to commit fully 100% to Russia as a military ally. But that doesn't mean that they don't have aspirations. I agree with you, of course. Yeah, they want to be a global power, for sure.
Yeah, no, that's interesting. I don't see them even believing they can separate Europe, from the U.S., but they are definitely trying. I think that what they're currently doing is trying to separate Saudi, Turkey, other countries in the Middle East from. And I think that's what the act in Israel by Hamas was about, right? In Iran, Russia, China, kind of group trying to, right before Saudi and Israel kind of, right, obviously signed that pact, coming in and trying to drive a wedge, right, and peel off that part as much as they can against kind of current West. But again, who knows, right? This is all speculation.
But think about, like, for example, when the French president Macron went to Beijing, he took 40 very prominent CEOs of French industrial companies and just French companies to China. This happened last year. And so there's this view in China that, look, we still don't have the technology we have. And so we need to have commercial relations with Europe. We're not going to be geopolitical allies with it, but let's have a better commercial relationship than the US. And that's where the true multipolarity of the world comes to fruition. And it becomes very much aware for everyone to see. During the Cold War, there's no way that France would have been selling, wide-body aircraft to Soviet Union. Like, that just would not have happened. In a true bipolar world, the US president picks up the phone and tells the French president, like, yo, what are you doing? Like, you're not going with foreign CEOs to Beijing. In a more nuanced world, where these relationships are more fluid and promiscuous, that's what's happening. So yeah, that's where we have to be less rigid about thinking of the world as divided into clear alliances. Because you're right, China and Europe will not be strategic allies, but their relationship can be much better than it should be in a truly bipolar world. And that creates these wedges.
Yeah, to be clear, I'm not saying the whole thing is a bipolar world, but when there are two significant powers and there are acts at some point, right? And I think World War II, right? We wrote, at some point, things do come down to power, right? And yeah. I mean, that's just the reality. But incredibly insightful thoughts and conversation. One last question before Niels wraps us up here with probably what he has to say. Does China invade Taiwan in the next 5 years, or do something at least that amounts to that? So
no, I think in the next 5 years, no. And I think one of the reasons is they themselves have been rattled domestically. I think they definitely have long-term aspirations to become the next, global power. But domestically, I think there is this sense that what's needed is a revival of the domestic economy. That's going to take some time, because I think China is in the middle of a secular stagnation. They're simply 10 years behind us on everything. And so they're kind of in the middle of their private sector deleveraging, which will take a long time. And during that period, quite frankly, China becomes more dependent on external sources of demand. So that is a big constraint to them, this sort of economic situation, the macro context, where they really need external demand more than domestic, because domestic demand is going to continue to suffer. The second issue is that, they've been watching Russia invade Ukraine, and they've been learning. They've been learning about Western response. They've been learning about civil society response, which I think shook the Chinese more than anything else. Just this cancellation of Russia, corporates moving out of Russia without any government interference. Like, it's not like the White House was out there calling Coca-Cola and McDonald's, hey, get out of Russia. I think the Chinese are watching that carefully. That would really affect them much more than it impacted Russian economy. And then finally, I think, they have time. There isn't like a clock. And I think it's partly American propaganda, quite frankly, that there is a clock for invading Taiwan. We hear about how Xi Jinping has to do it. He doesn't, and the reason I say that is because Chinese Communist Party has continued to rule China without having resolved the Taiwan issue. In other words, they can maintain legitimacy as a ruler of China without resolving this like problem, without bringing in the wayward province of Taiwan back into the fold. The question that Chinese policymakers have is, can we continue to be legitimate rulers of China if the economy completely collapses? If the entire world reorients and says, you guys are bad, boom, tariffs, boom, protectionism. At that point, that's a much bigger risk than not conquering Taiwan. So the risk reward, at least for the next 5 years, are clearly flashing red. And I don't think Beijing is going to make a mistake by invading Taiwan.
Marko, this was great. I'm not going to post my last topic. I think we should end with this one. Then we have something to start with next time we speak to you. This was a tremendous conversation and a lot of knowledge and experience, of course, that we're grateful for you sharing today. To all our listeners, make sure you follow and subscribe to Marko's work. As you can tell from today's conversation, we are truly living in a global macro-driven world, and it is perhaps more important than ever before to stay well-informed. From Cem and me, thanks so much for listening. We look forward to being back with you as we continue our Global Macro series. And in the meantime, take care of yourself and take care of each other.
Thanks for listening to Top Traders Unplugged. If you feel you learned something of value from today's episode, the best way to stay updated is to go on over to iTunes and subscribe to the show so that you'll be sure to get all the new episodes as they're released. We have some amazing guests lined up for you, and to ensure our show continues to grow, please leave us an honest rating and review in iTunes. It only takes a minute, and it's the best way to show us you love the podcast. We'll see you next time on Top Traders Unplugged.